got a pretty good chart pattern here that we're going to be talking about tonight. Pretty reliable. One of my favorite. Probably one of the easiest to trade. And quite literally, the only thing you have to do to be successful trading this pattern would be what? What do you think you'd have to do? Wait for it. Quite literally, all you'd have to do is wait for it. Now, I know that can be difficult for people. There's no doubt about that. But when you wait for this type of pattern, you can produce very high probability trades with very minimal risk very easily. I want to show you an example of it. Some of you may have been here for this. I was looking for the video from the one I did 6 months prior to this. Actually, a lot trying to think of what I want to say. Okay. A lot bigger profit here is when I did it over in Stupid Nova. Fibonacci retracements for a dead cat bounce. The dead cat bounce on a big drop gives us an estimated bounce target. We still need to trade Fibonacci as support and resistance. As support and resistance. This bottom line, this becomes our stop. The trick is if it falls through there, it's going to fall a lot further from there before we're able to exit. We're going to take another set of Fibonacci's, and as soon as we get the close of this third candle, we're going to start marking where we'll stop out of should it fall below. Remember what I said. When I say sell, your sell must be 50 cents below the bid. Why? Because I've done this before. I've been waiting on this for 3 weeks. I've been talking about it. We finally got our hit. If you guys remember, not long ago, I was talking about an ascending triangle pattern. You remember? Ooh, crap, craziness. I was talking about an ascending triangle pattern. When we go over to the daily, look at the retest from the ascending triangle breakout. Did I not say that the time to buy a stock was either on the breakout or the retest of it? Do you guys remember? Do we remember that? Yes, no, maybe? Highly reliable chart patterns. Highly reliable chart patterns. And all you have to do is display the patience to wait for them. All you have to do is display the patience to wait for them. That's it. You don't need to reinvent the wheel. You don't need to try to be anything special. Highly reliable chart patterns. So that was an excerpt from the video that's on the homepage of the website and also in our training area. And that was a live trade I did here. And as you saw, the reference I made from the daily chart during that video while the trade was going on live was a reference to an ascending triangle. And as you could tell through the conviction in my voice in that video, highly reliable trading patterns. Highly reliable trade patterns. So let's discuss an ascending triangle. It's a really, really easy thing to see. An ascending triangle would be most simply defined as a time where the tops of each run are at or close to equal, where the bottoms begin making higher lows. At this time, you see the stock going up from the bottom line into the top line, back down to the bottom line, up into the top line. Now, what's happening to the trade that you're making, even when you're buying it off the bottom line here or going short off the top line? What's happening is this pattern's developing. What can we say about that potential? The potential's getting smaller on every bounce, isn't it? And believe it or not, it's not on any one of these bounces that you're going to make the most highly reliable trade. That trade is going to come at a time like this. Now, with that, what am I displaying there and pointing at with that arrow? Give me a simple name for that. There, it's the breakout. Breakouts can be up or down, right? You can have a breakout down below as well. So let's discuss an ascending triangle for actually what it really is. What do you think I mean by that? What is an ascending triangle? It's a type of what commonly seen chart pattern? No. Think about it. Think about when you were getting bullied in school and somebody pulled that underwear clear up out of your pants and over your head. A wedge. It's a wedge pattern. You know, you'll have people that they'll call them ascending triangles, descending triangles, flag patterns, wedges. There's probably 100 different names for different wedge patterns. All a wedge pattern is a time where two lines that aren't parallel are meeting at an apex point. And those two lines define a trend of the highs and lows of a stock. When you put together, you have a wedge. And the way to trade a wedge, whether it's any type of wedge that people might say goes any way, is going to be best traded on the breakout, where breakout is defined as the price exiting the defined trending area. Where would the defined trending area be? Below that flat line and above the ascending line, right? Everywhere where there's red lines until that red line goes above that horizontal line. But you see, we could actually just as easily from here do this, at which point in time your entry would be here. So a breakout is a time where we see it leaving the predefined chart pattern. Now, as you approach what is called the apex point is the point where your two lines come together. Okay, that's an apex point. As you approach that time, it's pretty easy to tell when something has to happen with that stock, right? As a matter of fact, you will very rarely, if ever, see that stock make it through the exit or the apex point and just keep going sideways. So seldomly that it's not even something you sit and consider. As you start to identify stocks that are in this pattern, the closer you get to that apex, the more cognizant you need to be of the fact that that pattern is forming, and the more willing you have to be to follow it and watch it for the breakout. I want to talk about the breakout from an ascending triangle where it breaks above the horizontal line. At the point it breaks above the horizontal line, where is your stop on the trade? There you go, the horizontal line. What's an easy way you could establish in this trade or in preparation for this trade the ability to catch the breakout point that you have already charted and are preparing for? There you go. You can set a broker alert, right? And with Thinkorswim, you can set a broker alert based on a line. So based on a line, here comes broker alert. And you're able to get that broker alert. You can type in a comment. You can even do it by a price with other brokers as well, where you can type in your comment, says ascending triangle breakout. Now, I am still one that with an ascending triangle will still use the close of a day to determine my stop. So I don't use an absolute price below that horizontal line. And why? Probably 7 or 8 times out of 10, you'll see it bounce off that line. Like even when it comes back down to retest it, you'll see it bounce off that line. Oh man, it looks great for an entry. Yeah, you enter, they drop it just a little bit below that line. They get a big volume of people stopping out, and then it takes off. And it takes off so fast you can't get in it. So I kind of have a personal rule myself where it's based on a close back below that line for the stop, but I'm also not going to let it drop like 20% below my stop out. It's going to have to be a reasonable observation that you can make through your view of the chart. A couple pennies, doesn't matter. Now there's 2 times to buy based on any wedge pattern or any breakout, but in this case the ascending triangle. There's going to be 2 times to buy. The first time is going to be when it breaks that horizontal line. And because it happens so much, there's a second time for you to buy, and that time is going to be when it retests that line. Last week we talked about W patterns. The 2 times to buy were when it broke from that line and then when it retested that line. And in our examples, we saw that W line held up, and an ascending triangle example is actually the example that I showed in that video from March 11th for that dead cat bounce play on Freddie Mac. That was an ascending triangle retest. So it'll be on the retest of that line, where that line holds as support, that you then use that as your support level. And those are the 2 times you buy. You don't buy 4 or 5 days after because, ooh, there was an ascending triangle. Now, when we discuss different type of trades, and we've done this recently, we've defined scalp trades, day trades, momentum trades, swing trades, your long-term investment trades. What type of trade would we be talking about when it comes to a breakout pattern like this? No, no. It's a momentum trade. And your best indicator on a momentum trade will be what? Volume. Volume will be your best indicator on a momentum trade. The reason it's not a day trade or a scalp trade or a swing trade is typically a breakout pattern happens well after the swing has started. And therefore, it really wouldn't be a swing trade because you're not always going to be in for the entire swing, or really even from the most well-defined area of the swing. The reason it's not going to be a day trade is because it might last more than a day. But you have to understand that it might not. It might not last more than a day. But you'll know. You'll know when it's over. When the Momo is no mo, you can tell when that volume dries up. And that's what we call momentum trades, is Momo trades. That's not just something here in our chat room, but something where it's commonly discussed as. So when you see that volume dying off, for whatever chart you're using, if you're using a 15-minute chart and you're following an ascending triangle, and you see it break the ascending triangle, and every time it does, you see this big volume spike. And then typically what you do is that next candle, you see it kind of hanging out, kind of deciding what it wants to do, and quite possibly it could close maybe a little bit to the red, but not failing your stop, or it just hangs out for about half that candle and it starts shooting up. But the volume of each candle, not the volume of each second, from the chart where the pattern was annotated, will tell you exactly when the Momo is no-mo. Let's go over to my chart on the desktop sharing. And I'm going to show you a series of trades I actually did, and some people in here could very easily verify the alerts that I made on this chart over the course of just shy of 2 years, about a 1.5 year long period. And every one of them was based on ascending triangles. Not just the breakout, but the retest. Now, looking back, I want to tell you that I wish I still had my first alert and just kept the shares the whole time. Just being honest. Because I had shares right about 30 cents on FMCC. But the chart pattern has been so reliable that I'm very, very accurate at selling very, very near the top and buying not when it's slow and annoying, but when it's momentous. And I've done it nearly every 3 months for 18, 19 months now. It's that predictable on this chart, and that's why I wanted to use this chart for this lesson. So first off, you're going to see me with a weekly chart. You're going to see me with a weekly chart of FMCC. And at this point in time, we're sitting, February, March 2013 is what we're looking at. Now, as you can see, I do have a period here, my high here, but I come up and I start making higher lows through here. And it's very simple at this point to know where the momentum's really going to come into this stock. Now, ironically, my first alert on this was when it broke this ascending triangle on a daily chart. But I want to show you on the weekly chart how you can easily determine when that Momo is no-mo. And I'm going to start progressing through this. You see here, you got a spike in your volume. You got a spike in your volume, and that spike has closed you also on your candle over your ascending triangle point. Now this is the point where you're watching this chart that you need to definitely be taking consideration and watching, because you have all the reason in the world to buy this chart right now with a stop of 38.5 cents, 39 cents. That line would now define your stop on this trade. Now I want to progress where things got really pretty. They got really pretty. Why'd they get really pretty? Because I sold at $1.38. And anybody that was trading Fannie Mae and Freddie Mac at that time know that it's very hard to get in or get out when the momentum's there. During this time, you literally had to put in your sell like 50 cents below the bid price, or you weren't getting filled. But on the weekly chart, for a period of 2 years, we saw a stock that was at one point a $70 stock that was all but forgotten. Nobody did anything with, nobody talked about, nobody touched, until it broke an ascending triangle. Now this was a very short-term momentum trade, and as you can see, you've got your validation of that, where the Momo was no-mo. You see a huge volume spike in what? Less than a third, maybe about a third of that volume the following week. Now you can go through and find, believe it or not, let me back this up, one candle, two candles, another ascending triangle. This ascending triangle is very simple. And with a break above that point and a stop of a close below it, you find yourself screaming Happy Monday that next week when it opens. And you were in a venue where Coach Mike alerted this at 87 cents on the second breakout. Now look at your volume. See that volume bar? We're in the Momo. And we stayed in the Momo. And then the Momo was no-mo. on very heavy volume, but I want you to look at what it did. Now, those of you that were with me back at this time at the other venue I used to moderate at will know that not only did I alert the sell literally at 498, but I will personally say I didn't fill. And I mean, it took like forever to fill. It fell, and I ended up filling in like the 440s. And I told everybody then, you got to put your sell order 50 cents below the bid. It's got to be 50 cents below the bid. Some people listened. Some people kept trying to sell it on the bid and then having to cancel their order, sell on the bid, cancel their order, sell on the bid. It was a very difficult time. But it was actually the retest, the bounce from the ascending triangle that caused me to buy again. And this was just a day trade we did, but you know, a day trade with huge profits in a single day, because it actually hit and bounced up there like that day. So 100% trade just on a bounce. Now, you'll actually see over time on this stock that it's going to start to develop a little something else. And what it developed through this time, and this is why I wanted to start out by talking about the wedge pattern and how the ascending triangle was a example of the wedge pattern. Because we did develop a wedge pattern on the chart. This line would have to be removed there. At which time a good buy came. You see how your volume had declined here? You get an increase of volume as you go above the line. The next week, your volume's still up. This week, you look at this chart and you say, okay, if it goes down next week, after this low volume, I'm stopping out. Next week it came out and you went, Momo, because you've got a Momo trade. But ironically, your momentum trade happened to be another ascending triangle breakout. Remember, the only difference in a weekly chart, a daily chart, a 5-minute chart is how much time each candle represents. They're still red and green candles, right? You'll still identify difference in patterns on a weekly chart compared to a daily chart, compared to a 60-minute chart, compared to a 15-minute chart. But you'll find the same patterns occurring on your charts, on all of those charts at different times, providing you with a different regularity of trades. And any time that I see an upper wick that represents a 25% of the movement from low to high, I'm exiting my trade. Now, you're going to see very low volume here. Very low volume. And ironically, also what you need to notice here, and those of you that have been with me a while will know that the way I teach, most of it is reliant on not absolute high prices and low prices, but opens and closes, right? So I want to make sure I point that out. I should have talked about it at the beginning, but let's watch the highest close. Because we still have higher lows from this line, don't we? And we have a support from the ascending triangle it just broke out of here. Big volume spike. A new Momo play, right? We actually here have another ascending triangle. Our lows are higher, and we cross the high point. Now, in this particular case, you would have stopped out of this trade. But if you got in it from here, you stopped out of it here. Not such a bad trade, huh? You might have looked back and go, man, I wish I would have had, what was the high there? 333. You are so rarely going to get the lowest buy and the highest sell that concentrating on that will kill you. Now, we need to start watching again here with a line above our highest close. We already broke this one and it failed as support, so we'll take that one out. I want to keep watching and watching our volume. Oh, look, that darn line just served as what? What was that line to me right there? Resistance. Don't jump the gun. Don't jump it too early. It opened above, but it closed below. We're getting close to an apex point, aren't we? We're getting really close to a point where this stock has to do something. And while it's getting to that apex point, look at your volume. Really low volume and barely any movement on the candles, right? Uh-oh. What do you do here? Mind you, leading into that Monday, this was on our watch list and alerted here, by the way. I actually sold a bit too soon on it. But this is the trade that actually led into that dead cat bounce trade that I showed the video of, the little excerpt from this at the start of this lesson. Your stop is pretty darn easy, right? Your stop's at 308. Hello, momentum, right? Now, just like with any other trade, even when the volume's high, but it's falling, when you opened here and it ran to $6, this was a big old green candle, wasn't it? This was a big old green candle at that time. From the time it opened at 525 to where it hit $6, this wasn't a wick, it was a big old green candle. And at the time that green candle gives you a wick that exceeds 25% of the movement, so that would have been about 580, which is where I sent out the courtesy sell alert, because where did Coach Mike sell? Quite literally, it was at like 523 or something like that this week. And then for the first couple days of the next week, I felt pretty bad about it. So I was like, dang, goes up to 6. I was consistent with my trading system, though. Actually, no, I have to look at that. I actually think it was like 517 or 519 that I sold. But anyway, this candle here looks about identical to this candle here, doesn't it? I mean, so much so identical that those of you that were over in Supernova in May, at the end of May of 2013, that saw me live trade this dead cat bounce, were probably saying, I wonder if he's going to do it again. And you know how I know that? Because I had people like Duwat sending me private messages for 2 days. Dude, you going to do it again? You going to do it again? You going to do it again? Yes, shut up. I'm going to do it again. Yeah, it's an OTC stock, so there's no options. Now, we only took it to the bounce point, back up in here, okay? The next week, it kind of played around and dipped and dooed and whatever, but if you notice from your breakout here, even though I got it just a couple pennies from when it came down, a couple pennies above, and I just took the scalp, in reality, at this point, there was still no reason to stop out of this trade. You notice it did not close back below. So even on that next week, you had a swing entry with any close below 308 as your stop. And you see that since then, you would have still been continuing in the pattern, and on your weekly chart, you would have a line right here. Not right here. That one's from my daily chart. And do you see that, how all FMCC is done? Is, I wouldn't say only a series of ascending triangles, because right here, your indication to buy was on a wedge pattern, wasn't it? Excuse me. Your indication to buy down here came on that wedge pattern. And that wedge system has produced, and a lot of you have seen me make live trades on this. This has produced 7 figures of profit by trading an ascending triangle. Why do I say that? Because I didn't trade that wedge down here. I didn't trade the descending triangle. I got in it late. Over in here. Traded ascending triangle, retest, get it on the retest, you get it on the breakout, you get it on the retest. But listen, don't be one that is so stubborn that you think it won't retest that ascending triangle. This chart alone that I'm showing you, does it not prove to you with pretty good accuracy that it's going to retest that ascending triangle breakout point? I mean, you'd probably have to agree with me there, correct? So don't be the one that believes all the bullcrap you read on Twitter or iHub or whatever else that says this thing's gonna go to $9 when it's sitting at 6. When the Momo is no-mo, get out and laugh at those people when you buy it again at the breakout point. And don't be afraid to literally laugh at them. Because believe me, during that time, they are going to make their best effort to make you feel stupid. Now, when I can recognize something like this on FMCC, remember what I've taught in pretty much all of my prior lessons, where you can't make a trading system fit a chart. You have to find the trading system that chart fits, right? Would you say that there may not be another reason to look at any other possible trade or trading system on FMCC than this one? Would that make sense to make that type of statement? Because let's face it, if you do, you might get some winning trades, but this one's pretty darn accurate. And since the beginning of 2013, it hasn't produced a loser. I think that's pretty good. Now you'll see these same types of patterns, which, just to help you guys out, those of you that use Thinkorswim, before I delete all the drawings, you can load that up, and once you load it, and if your drawings are synchronized, you'll have these drawings here that you can have on your chart. Set alerts on them. Don't buy off the bottom line when the ascending line is slow. Buy the momentum. Why? I know you all well enough. There's only probably one or two of you in here patient enough to buy when it's slow and go. And you're going to end up selling a winner out of boredom rather than reading the chart. So buy the momentum. And I'm being very serious. That's not being derogatory or anything towards you. That's me knowing most of you and saying that that would be the better trade for you. So I'm going to delete these drawings here. And I'm going to go to a daily chart. And I kind of want to annotate on this daily chart. Oops. First with a series of horizontals. And I'll follow that up with a trend line. I'm just going to change this up real quick as far as what my defaults are. Okay. So I got a trend line here. Let's look at this. I get a big volume spike on the breakout. I come back and I hold the stop out point. And I begin to rise from it. This line is my stop. I again, and you could go from here or here, you know, if you're watching it through the consolidation time, wouldn't really matter. But as I consolidate, my lows get higher, my highs stay the same. And now look at your volume during this. Teeny tiny volume. And then you get this big spike right here on 11:13. What was that spike? Breakout spike. Your stop becomes a close below, right? I make a run up. Now, you could make a good argument here that even though it was heavy volume, this day your volume decreased. The Momo is no-mo. Doesn't mean sell it that day. Be watching the next day. And at least don't give up your low from that previous day. A momentum trade should never give anything up. Unlike a swing where you've got to really follow in a trend where you might make like 3 green days, 2 red days, another 2 or 3 green days, maybe 2 or 3 red days, and you're monitoring the trend. Where a momentum trade is different is it has to go in that direction, because when it stops going in that direction, it's over. Done. Finito. Which would have had you exiting at the low from the prior day. Still a good trade on the breakout. And if you look at it from 230 to 290, 295, that's a pretty good trade. Where are you watching to buy it at? On the retest. Look here, you closed right on the line. Where did you run up to here? Your prior high. You know where your close is. You can easily watch through your first pullback. And you begin to develop a trend. Now these couple times, those would have tricked you out. The first one would have tricked you out. You'd have bought, or just still been holding, and may have stopped out, but we don't throw away a chart that we study and follow because of one stop out. We don't do that here. You got stopped out once because of it. You don't let it happen again. And what do you get at that time? Look at your volume. Spike. You held it the following day. Watch your volume. Watch your volume. Decreases here. To be quite honest with you, at that point in time, on a momentum trade, would I have sold that next day? Yep. I absolutely would have. And 2 days later, might I have bought them back? Yep. How did I do it here? I sold half right here. Sold the other half on this day right here. But as you come up to this point, now, when you get this drop here, you came really darn close to that gap where you had a secondary entry. You know where your stop is on it. You start to see that bounce. You know, this comes down to that low of 470. You start watching it rise at 480 or so. You know that your stop on this is 462. A 20-cent risk on a $4 stock, that's 5%. You could have had another entry there. And then at the worst case scenario, when it gave up the low from the prior day here, you would have looked to exit. And that led us in to the trade that we discussed where I showed the excerpt from the video. The dead cat bounce from the retest of the ascending triangle. Now look where you are right now. Now, I don't follow this much as, oh, I got to look at the exact line and, oh, it failed today. That's not how I follow an ascending triangle. Why? Because I'm not buying off of this line. Look at your volume since the last trade I made on it. Now, there's a case to be made that, hey, if we'd have just bought and hold, that's a nice trade that took 3 months. But I like it when it's 8 days. Rather than, you know, hey, it's middle of June, still holding. Now, I do have ones that I'll buy like that, but this isn't an optionable security. This is very risky to me. I can't just take puts when the stock is falling down. It's in or out. So I'm not concerned at all much with this line that's ascending because, quite frankly, all it has to do is keep making higher lows. Doesn't matter how high those lows are. I could draw this line, you know, clear down over here one day. The point to be made is the breakout point. And if you notice, you double topped on your breakout point the other day. A double top at a resistance point is typically a bearish sign. If you were long in it for this, then you would be one that's more trading the higher highs, higher lows. Well, guess what? You got a lower high. But you're going to want to watch your low here at 407, because if it were to fall below that, you would have a momentum trade for sure if you could find shares to short. But at this point in time, where do you think the broker alert would be that we'd want to watch on this or set for this? Right on that line, right? Crosses above. That's where I'd want it, right? Cross above that line. I'm not just going to buy it right when it crosses above it, but I'll get the broker alert and I can start watching it. It's pretty safe to assume that with Fannie Mae, Freddie Mac, that you can wait till the close of the breakout day and still make money. Don't you think that's pretty safe to assume? Or do I need to go back through 18 months of trades to prove it to you? When you're planning a trade off a daily chart, it's typically a very important thing to allow that daily candle to close. So to either take an entry at the close of the day or early into the next day. If you're planning one off of a 1 minute chart, same thing. Let your 1 minute candle close. To confirm an actual chart pattern as being factual as opposed to, well, it might do that, is the difference in buying, well, you might have still had that line, but you really didn't have it here, but it could have been right here, buying a day that jumped up and little wick and crap, I just out. Might have been a very small stop, a very, very small loss. But the confirmation of the close, though it may have you buying slightly higher, on a momentum pattern like this, is not going to cheat you out of profits. Now, these same types of patterns can be seen on every time frame of chart. Every time frame of chart can give you that. Here's my drawings for FMCC daily, if you guys want them. Pasted them there in the chat room. But I can go to a chart like Apple. And let's go down to like a 15-minute chart. Actually, we'll start with a 60. Do you see the series of highs being made here? You hit it, you hit it, you hit it. All the while, whether you have this line somewhere like here, oops, or even if you had it here through the consolidation, and I will tell you that typically I'll mark it through the consolidation. You broke above the line here. You came back and retested it, but did not close below it. And you continued on with your momentum. In comes line number 2. As you began, and falling and falling and falling, you actually, to be honest with you, have 2 different ascending triangles that happened in the same sequence. But just by trending, following your lows, and knowing that it's the breakout point that matters, look at how your volume confirmed this. This one kind of closed right at the line. Next candle, broke the line. Big stinking volume. Next candle, it broke another line. The volume had slightly decreased. Now look what happens. Would you have stopped out here? Look at it. Heck, this right here, was it not just another entry point? Because where do you buy an ascending triangle? When it breaks out or when it retests the line. And I would call that a pretty solid retest of that line. So it doesn't matter if you're looking at long-term charts, short-term charts. You can begin to see the series of exactly replicating patterns present themselves. Now, in relation to individually discussed trades, scalp trades, day trades, momentum trades, swing trades, your long-term investments, what type of trade is really any particular chart or candle pattern, but especially a wedge or ascending triangle in this case? What type of trade is it? I asked the question before, so by now people should know. It's a momentum trade. And what tells you to start watching for an exit on the Momo trade? When is the Momo no-mo? What's your best indicator? Volume is your best indicator. When your volume decreases, it doesn't mean, oh, I got to try to get the highest sell. It means start watching it for your exit. Start watching it for your exit. Now, if you got in on this ascending triangle break, by the time you broke this one, you're happy because your stop is higher than it was when you entered. You have no reason to fear. This was one night of, okay, I'm a little nervous about tomorrow. And by tomorrow, the opening candle breaking here, you're like, sweet, I can sleep good now. Whether you're trading common stock or trading the options, you know where your stop is. And really, if you look at it, it almost turns into a swing point trade after that, with a monitoring of your swing highs. And once the swing high is broken, that swing high becomes the support/stop. And if you really put it all together as such, what you find is an ascending triangle trading system is highly reliant on swing points. But it's buying at the time where momentum comes into the stock, as opposed to the slow ride. Many people want instant gratification. What's a good way to get instant gratification? Momentum. And you watch for the lags in your volume to indicate the potential that the trade might be over. If anybody happens to want a link for this chart, just to kind of save for your reference, maybe you're studying for it. But a momentum trade, let me tell you this much. Don't let a momentum trade turn into an investment. When that happens, it means you missed your stop and you're down. Let's go to, a shorter term chart, a 15-minute chart. Let me delete my drawings off of here. Oh, I see an ascending triangle. Pretty consistent with those tops there. And I see a trend of higher lows. Volumes lagging, 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 lagging. Boom! Biggest volume bar was the one that closed above the swing point, or that ascending triangle breakout point. And where did we go from there? Up. Now, if you look at this real closely, I like going off my closes in the wrong spot. Not an ascending triangle, but a wedge. Right? Went off my closes. Look, I based right at that close. I held it, held it. Ooh, hey, I'm over the wedge. Where could this one get really momentous again? Go to my highest close. Just build me an ascending line. Maybe somewhere above this line. See, we got little candles here. This isn't the momentum trade. You give this to the swing traders. Momentum traders want, boom, Momo's no-mo, I'm out. Hey, cool, I'm glad I sold because this would have annoyed the crap out of me. But those swing traders or longer-term traders, this doesn't bother them. But for what you may have been trading on a 15-minute chart here, would have literally been a day trade, and that's all you wanted. Hey, look, my volume's dried up. First chance to exit, I'm going to exit. Oh, look, now I'm making multiple. Yep, I'm done. Well, I have to be done anyway. It's 4 o'clock. Are you going to have a pattern like this show up in the chart every single day? Do you think you'll get something like this every single day? I mean, if you're a Apple day trader, or with the focus group, if you're following Facebook or Goldman Sachs, you're right. And it's usually, Dan, it's usually those first couple candles that will give you a break of a previously established pattern. But you're not going to get these patterns every single day. One thing I like about how Gator was trading Apple for a long time, and once they announced the split, he had said, I'm going to stay away from it until the split happens. But he didn't trade it every single day. He had a couple chart patterns that when it did those, he traded it. His day trades on Apple were kind of like I was discussing with FMCC. Why try to trade it another way if what you're doing works? And in this particular case, you might not see the ascending triangle every single day. But it is such a high reliability pattern that when you see it, even in the morning when it's like, man, I really don't want to buy in that first 15 minutes, this is the time where you break that rule. Why? If you're studying that chart based on a series of patterns that you might only see 1, 2, maybe 3 times a week, you've got to buy. You know where to stop out at. You know where to sell at. You sell if it closes a candle below that line. And you ride that son of a gun. Now, is this going to be the best way to trade every single chart? No. There are some charts that if you study and backtest it far enough back, you'll find that almost every time it makes one of these patterns, it fails. Well, that's why we study the charts before we trade the charts. That's why I study a chart for weeks before I ever put money in it. I don't care what random news play comes up on a scanner that I could chase for a little bit of profit. But when you find something that fits really, really well, like this, you trade it when the opportunity comes. Maybe after the lesson, Dan, but Priceline is one I don't like to get too much into because not very many people here are actually going to properly trade it. They're going to take little lotto trades and hope they work out because most people aren't going to pay $3,000 a contract to properly trade it. But we can go over that later. Now, as far as ascending triangles go, it is very, very easy. Oops, let me share this and give you the link first. it's very, very easy to measure the risk of an ascending triangle play. The reward you can't always measure because it's a momentum trade. And you're selling when the Momo is no-mo. But the risk is very measurable and very minimal so long as you stick to the trade plan. Those of you that are using Thinkorswim, you guys know I don't run scans. People ask me all the time, what scans do you run? None. That's my answer. I look through my entire watch list of charts every single night and plan trades off of my watch list. Before a stock gets put on my watch list, I study it for months. But Thinkorswim will allow you to customize scans. But what I like even more, if it'll allow you to customize scans and put it on your watch list with a binary 1 or 0 as an equivalent to true or false. A 1 is true, a 0 is false. And you can sort by it. Look, oh, ATVI. See, it's got a 1 on my ascending triangle. ASCTRI. I've got a 1. It's the only one I got. Well, let's go look at this chart real quick. Need to change it to a daily. Well, I'll be looky here, looky here, looky here. It broke out of an ascending triangle yesterday. It opened at the support point today, and it continued. And I can use a scanning command to actually annotate based on my watch list. I mean, I can scan my individual watch list. I can go to scan and scan in all stocks, which is all the stocks in the market. I don't trade random stocks. Or I can put in, you know, like my master list, and this is my list, and, you know, I can hit the scan button, and based on the stuff I have in here, it'll pull up some crap for me. No, I use the highest close. It just so happens that that's the top of a green candle or the bottom of a red candle. So there's many times I've got it on the bottom of a red candle. Let's put it this way. There's 6.5 hours in a trading day. There's 24 hours in a day. When those 6.5 hours are over, the next 17.5 hours are spent scrolling that ticker symbol and that closing price across the screen constantly, right? When you watch the news, when you read the newspaper, it's based on the closing price. That's the important price. So I can scan individually by searching every random stock in the world, which, you know, if you got about $70 billion, you could probably accurately trade every stock with proper allocations. But if you're a normal person, you can't trade every stock that exists in the stock market. And if you try to, what you're going to do is you're going to miss all the stocks you like making the moves that you planned out. And you're going to chase a bunch of stocks and just hope that you make more winners than losers. If you go to the Market Watch tab on your Thinkorswim, click on quotes and pull up your watch list. You'll see right here where it says symbol, there's a little dot beside it. If you click that and click customize, this little screen will pop up. Scroll this down to where you got like custom 1, 2, 3, 4, 5. You see a few of mine are already gone. Select your custom one and hit OK. Now I'm hitting cancel here because I've already got this done, what I'm going to do for you. And you're going to get a screen that's going to pop up. It's going to look like this, but without all this coding in there, okay? It's not going to have all this writing. And it'll probably be on the condition wizard tab. And over to the right, it'll say delete. Well, delete that. rename it to Ascending Triangle. You can click your ThinkScript editor and type all this in, or I can share this with you, right like this. You can load it onto your watch list, and you'll be able to scan your watch list, and this updates every 3 to 5 seconds. So it'll give you an accurate, like, hey, if that's breaking out, or in the evenings when you do your studies. And you can simply click the top of the column, and you can sort. A 1 equals true, a 0 equals false. False would say, we don't see an ascending triangle. True would say, we see an ascending triangle. And that script is already predefined in the programming to only search back no more than the previous day's candle. That's why ATVI popped up, because yesterday it broke the ascending triangle. Last night when I was in here and I was showing some people this scanning tool, I had 6 of them on there. Today there's only 1. Why? The other 5 were more than a day out from their actual ascending triangle break. It's not opening properly for you? Well, no, you have to, when you click the link, here, let me show you here in the chat room what it'll do. When you go to the link, you got to copy and paste it into your browser. And if you're using Thinkorswim, you click Open in Thinkorswim. And then it'll pop up just like that little box I had. And all you got to do is hit OK. And then it'll set it right into your watch list just like this. If you're not using Thinkorswim, it's going to be worthless to you. But at this point, I'm going to go ahead and I'm going to stop the video.